San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the debate over your data, how tech giants like Amazon and Google are expanding their information empires as they grow into our homes. Plus, Activision is planning to dramatically slash costs after reporting fourth quarter results that missed estimates and delivering a disappointing forecast. Can the video game maker turn around amidst competition from Fortnite? And Russia is planning to sever itself temporarily from the global internet to prepare the country to deal with a digital attack that would leave it cut off. Is this the future of global cyber defense? First, to our top story, President Trump struck a conciliatory note on China trade talks, saying he would let an upcoming tariff deadline slide. The president said he could let this March 1st deadline for higher tariffs slide for a little while if the two sides are near a deal, though he's not inclined to do so. He told his cabinet that there are no plans yet for him to meet President Xi Jinping next month. Meantime, U.S. officials are in Beijing for talks starting Thursday. Saleha Mohsin with Bloomberg News is standing by in Washington with more. So, Saleha, what exactly did the president have to say?
Yeah, the President of the United States, he was talking to reporters just after a cabinet meeting, and he was asked whether the deadline for a trade dispute to be resolved between the U.S. and China was a hard one for March 1st, which is the date that we expect more tariffs to be levied against China that the U.S. has already announced. And he said that it's not a hard deadline. He is willing to fudge it a little bit if it looks like they are getting very, very close to a deal, which is brand new information. So far, it looked like no matter what, on March 1st, on March 2nd at midnight, there will be an extra hammer that goes down against China. And it looks like the economy over there is slowing enough that Chinese officials were going more and more concerned about the next round of tariffs. And now it just looks like he is really hoping for a deal and willing to make some concessions in order to get that deal.
There are still no plans, though, for the presidents to meet. So how close are they really to a potential deal?
You know, they can always pick up the phone, the two leaders, and call each other and talk out the details. But the problem is that the policymaking process so far, from what we can see, has not been a traditional one. There is no documentation, draft agreements going back and forth. There's no paperwork that we have heard about to show that they have concrete proposals where one side is willing to make concessions yet. And at the same time, we have Donald Trump, who is hoping that investors will continue to invest in the U.S., buoy stock prices, and he's also having to contend with heading into an election cycle. He is hoping to get reelected. Democratic candidates are raising their hand one by one to run against him, and he wants to make sure that rural America, that elected this president and brought him to Washington, votes for him again. And at the same time, farmers in the Midwest are seeing bankruptcies rise, in large part due to the trade tariffs with China.
This is the second conciliatory note, you could say, that we've seen from the president in the last week, the other one being on a potential deal to avoid another government shutdown. Why do you think the president seems to be in the mood to compromise?
I think that he's heading into a period where this is 100% a Trump economy. We are going to start seeing the data from the IRS about how the tax cuts are really panning out for the average American voter. He is also hearing what the other side, Democratic candidates, would like to do with their own economic agenda should they be elected. He is just trying to show the world that he has boosted the U.S. economic growth and that he can keep it going. At the same time, he is having to contend with warnings of recessions, recessionary fears either coming from a slowdown in Europe, in China, or from Brexit. And so he's just trying to prove that his economic agenda, which in large part has to do with trade, is working.
All right, Bloomberg's Saleha Mohsin for us in Washington. Of course, we're going to continue to follow developments in those talks as they commence later this week. Now, as tech giants like Amazon and Google work to place their smart speakers at the center of the interconnected home, both are expanding the amount of data that they gather about us, the people who use their voice software to control these gadgets. It is stirring up more privacy concerns. Joining us now to discuss, BetaWorks CEO John Borthwick, a startup studio that builds and invests in next-generation internet companies. Also with us, we've got Bloomberg Tech's Matt Day, who wrote a piece exploring these issues. So, Matt, Amazon and Google, no question, they are encroaching even further into our homes. They're collecting more data about us as they go. Just yesterday, we covered Amazon buying the Wi-Fi systems maker Eero. How does that fit into this broader strategy?
So Amazon sees an opportunity with its Echo smart speaker and its Ring doorbell company that it purchased last year to really be a kind of force to be reckoned with in home technologies, whether that's shopping with your voice, controlling other gadgets, televisions, thermostats, and this wireless purchase that they made yesterday of a company out of San Francisco is seen as just sort of the next step in that evolution.
John, do you see more pros or cons with Amazon and Google living with us?
I mean, I think that in 2019, the way, when you look at the tech landscape, you can see that, tech with all the promise of doing good and changing society and giving us wonderful tools to enable us to do things is also starting to encroach upon our lives. And I think that the idea of having an open channel for these tech companies into the data stream for my home, and I think Matt will talk about some of the passive data collection that's taking place. I think it is not good. I don't think it's good for consumers. I don't think it's good for our country. I don't think it's good for innovation and for startups.
On one hand, when you put it that way, it is terrifying, Matt, and you wonder if consumers actually understand what is happening. Talk to us about that passive data collection and what these companies are collecting about us that we may not even realize.
So in the last year or two, both Amazon, which is sort of seen as a leader in smart speakers, and Google, right behind them, started talking to their smart device maker partners about increasing the amount of data that they transmit as a matter of course back to that central hub. So what both companies are trying to require now would essentially mandate that any time a smart light bulb, for instance, is toggled, if you go over and flip the switch, that the companies get a record of that, right? And their point is they want to use this to improve the user experience, to make all these new features based upon that knowledge of what's going on in your home.
But what's key is that it's not with the user actually doing anything, right, to the smart speaker.
That's correct, yeah. It's not necessarily, when you invoke Alexa or Google Assistant, it's any time the device status changes.
So how, Matt, first of all, how can consumers protect themselves?
So on this technology, there's not a whole lot of granularity in user control. Both Amazon and Google offer you options to go back in and delete data that the companies have accumulated. They both have websites where you can make that happen. But in terms of sort of stopping the devices from informing the companies in the first place, there's not really a way to do that other than to unplug them from the smart home system.
John, what do you think the social repercussions of this are?
I mean, in the short term, I think that we've seen a few incidences of fairly scary and weird hacks that have taken place where people have hacked into other people's smart homes and started people speaking through like baby monitors or adjusting their thermostats. We've seen sort of software upgrades go haywire and reset people's thermostats and then frozen pipes. And so we've seen sort of small isolated incidences. I think over time, as you start to see the entire home get connected, and in particular, I think the point which Matt's making here, which is key, is that these companies are trying to turn these devices into the central hub that passively collects all the data for the home. And then if that hub either gets hacked or if the company wishes to use it for advertising data or for other data, they're free to do that. And I think you could see the entire home being sort of at the bequest of a single technology provider. And the consumer's not really understanding that that's actually what they're buying in the first place.
Matt, what are the companies saying about this? Because, I presume Amazon would say, well, unless you say Alexa and you turn it on, it's not collecting this data about you.
Well, on the contrary, they are, even if you don't invoke Alexa. But one of the things, the point Amazon made, as I talked with them about this, is, listen, we value consumer privacy, which is something a lot of the big technology companies say. And they say they explicitly do not use this for advertising at this time, right? That the data they glean on what you do with your home appliances is not going to be used to inform any sort of advertising. Now, Google, which didn't comment to us for this story, has not made a similar promise, and it's sort of unclear what they're doing with it.
Go ahead, John.
So I think there's two important points there, and we saw this with Facebook, you know, going through the Cambridge Analytica episode and beyond, is that Facebook, this distinction of are they using it for third-party advertising data or are they using it to inform internal data sets is important, and I think that some of the companies are glossing over that. And so I think that they use this and they're using the data for internal data sets, which gives them the ability to more finely grain target customers for a whole bunch of services. That's the first point. The second point relates to data, which I think is critical here, is that, you know, we have all these amazing services today that companies are giving us for free, software services. And I think what's important is that, you know, quarter after quarter, these companies are managing to get more and more margin out of their and profit out of these products. And that's happening because they're monetizing the data behind these services at more and more granular levels. And so I think the fact that these, you know, we have a handful of companies that are becoming massive data collectors on all sort of quarters of our life is a problem. I don't think it's good for society or good for users or for technology or for startups.
Now, while I have you, John, I want to talk to you about another advertising market, a small but growing one, and that is podcasting. You were an early investor in Gimlet and Anchor, companies that have been bought now by Spotify. You know, people who listen to podcasts love them, but it is still a niche market. What more activity do you expect to see in the podcast market?
So I see, I mean, the podcast market is, it's related to these smart speakers because it's also a voice, it's a voice interface. But I think what we've seen in the last 5 years is this sort of emergence of what I now see as a new wave of innovation and of development that's coming into the podcast market. And so the podcast market really started around 2000. It was a small niche market. But about 5 years ago, we at BetaWorks decided to, we saw a handful of things which I think were a sort of healthy mix of intuition and data, where we saw on the data side that, you know, people's phones and battery life were getting better and that Bluetooth was more stable and people were connecting to their cars and using their phone as their primary device in their cars. And if you think that Americans on average have about 2 hours a day that they are not connected to a visual interface, and the auditory podcasting interface is this wonderful, deep, rich interface for storytelling, both fictional and non-fictional. And we're seeing, you know, a significant growth there. And the acquisition in the last week of these two companies, two of the biggest acquisitions to date in the space. I think it's the beginning of a whole new wave of media and of interaction in the online space.
Fascinating. All right, John Borthwick, BetaWorks CEO, thank you so much for stopping by. Also, a great piece by Matt Day. You can check it out at Bloomberg.com. Breaking news now coming over the terminal. Amazon and General Motors are planning to invest in the electric truck maker Rivian. This is according to Reuters. We're going to continue to update you on this story as we get new headlines, of course. Last week, we told you about Amazon investing in the self-driving tech startup Aurora. So interesting moves Amazon appears to be making in autonomous driving technology. Coming up, the video gaming industry's slump continues with Overwatch maker Activision Blizzard. How the Fortnite frenzy is crushing sales. Next, this is Bloomberg. Activision gave a disappointing forecast for the current quarter while announcing plans to slash costs across the company. This extends a tumultuous stretch for the game-making industry after both Electronic Arts and Take-Two Interactive produced disappointing earnings last week. Joining us to discuss, Bloomberg intelligence analyst Matt Canterman, who covers entertainment and gaming. So, Matt, what are these costs across the board that they are going to cut?
They're going to centralize a lot of functions. So a lot of things like sales and marketing, they're going to start doing that from the corporate level, both for the different studios they have as well as geographically. Activision's expanding its footprint, not just into new genres, but also they're pushing really hard into new geographies, mainly into Asia. And so they're taking a more holistic approach to their marketing. And so that's a big part of it. They're also doubling down some efforts on the key franchises. We think of like the World of Warcraft and the Call of Duties, and, kind of shifting resources off of, some projects that were in incubation that aren't living up to expectations.
So talk to us about your impression of these results in the context of EA and Take-Two also having disappointing results as companies, games like Fortnite are taking off. So certainly parts of the industry are healthy. Yeah, you're seeing the Fortnite-itis, if you will, across the industry. So, one of the key drivers of the industry, both from a revenue and a profit perspective, is the rise of in-game spending. And that's driven by people spending time in the games. But if they're playing Fortnite, they're not playing Call of Duty, they're not playing Overwatch, they're not playing World of Warcraft. And so you saw them talk about on the early portion of the call how World of Warcraft, Hearthstone, Overwatch, the in-game monetization significantly underperformed their expectations. And that was a key driver of the weak results and more importantly, the weak guidance heading into 2019. But you are seeing the stock up in after hours. I mean, look, the stock has been down 50% since October. And so clearly expectations have been set extremely low. And now they're kind of resetting expectations back to where people think they can build from. So, I think they're at a good point now where, okay, we know that last year was bad. How can we build up from here? I have this chart here in my Bloomberg showing the monthly active users for Activision, generally on the decline, slight rise over the last quarter. What is Activision in terms of their production? What are they doing about this? I mean, so again, that goes back to what they're doing with the marketing efforts, but also at the end of the day, they have to make better games. They have to launch new content at a faster cadence, and part of the restructuring they're going after is to fix all of that. And so things like Candy Crush, things like Overwatch, they need to invest more and release new content at a faster clip to keep people engaged. And if you can sustain the engagement, the revenue tends to follow in the gaming industry. Is there a mobile opportunity that they can exploit here? Absolutely. So we knew it was in the pipeline, and they confirmed it's coming this year. So Call of Duty Mobile in partnership with Tencent, as well as Diablo Mobile in partnership with NetEase, the two largest gaming companies in the world, both based out of China. Those are coming this year, and it's hard to see how big they get. It's going to start small and build up over time. But longer term, bringing the key IPs, the key franchises that this company has, think of Warcraft, think of Call of Duty, to mobile is a big opportunity, considering that excluding King, their mobile revenue is very small. All right, we're going to continue to follow up on these Activision results as they cross. Bloomberg's Matt Canterman, thanks so much for weighing in. Coming up, we will explain how a female-founded startup is valued at nearly $1 billion now. Who is behind it? We'll tell you next. And we're live streaming on Twitter. You can check us out at Technology. Follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg. A 27-year-old female CEO is now running tech's latest unicorn. And Tiki Bose started a fashion platform called Zalingo based in Singapore in 2014. She's now raised $226 million from investors, and the company has a valuation nearing $1 billion. Joining us now to discuss, Rebecca Greenfield, who covers diversity for Bloomberg. And Rebecca, women-run companies get just 2% of funding from venture capitalists, just 2% of funding. So how rare is a female-founded unicorn?
It's very rare. There are very few companies funded by women that get this high of a valuation. It's very hard for women to raise money in Silicon Valley, and in any tech company, and that has a lot to do with there are just so few female VCs, and women just have a hard time convincing a lot of these men that their companies are going to be successful.
So this is a company we haven't covered on Bloomberg Tech before. What does Zalingo do, and how does it compare to some of the other fashion e-commerce offerings?
Yeah, so it's like many of the women-founded tech companies. It's a fashion startup. It's in Asia, so there is a lot of the female-run tech companies are actually based in Asia. So I think that, so it's a fashion startup.
So what is the progress? I mean, you cover diversity. What is the progress we are seeing worldwide when it comes to female entrepreneurs? I mean, the numbers are just so dismal, and presumably it'll take a lot of time to move the needle. But are we seeing change?
So I think there is some change. I recently wrote a story talking to a bunch of women in tech about how they view Sheryl Sandberg, but funding came up from one woman who I talked to who had to raise money for her company in 2010, and she said it was so impossible to raise money, and there were no female VCs. And she said now, 9 years later, she's trying to raise money for another tech company she's founding, and is having a much easier time. There's just more female VCs. There's more of an acceptance that women can run companies. Still, the numbers are very tiny. As you mentioned, that figure that 2% of companies with all female founding teams are getting funding is the figure, but more money is going to women who are on teams with men. So it's not like no women are getting money. So I think there is noticeable progress, but it's definitely slow.
Elizabeth Holmes, one of the more recently prominent female entrepreneurs who crashed and burned spectacularly, there was a lot of optimism for her. Do you think the fact that she didn't succeed has hurt female entrepreneurship?
So in that story that I was reporting on Sheryl Sandberg, the same question came up. Is Sheryl Sandberg's, the negative press against Sheryl Sandberg hurting women? And one of the women I talked to did mention Elizabeth Holmes and said, it's not good for women when other women fail. And that's so unfortunate because these women, since there are so few of them, they act as a stand-in for all other women. So when they fall, I think some people might say like, oh, that's what women do. Women are going to fail. And I think that is the fear of many women. I don't know how you measure that exactly, but it is something that women worry about. And researchers have found that this happens when there's just like a small amount of minority of people of any kind. They tend to be a stand-in for all people, for better or worse.
All right. Well, good to hear about the good stories of female founders who are paving the way for the rest. Rebecca Greenfield, thank you so much for bringing that one to us. Coming up, Google has said it is not getting into China right now, but some shareholders aren't satisfied with that answer. We'll discuss. And later in the show, Russia unplugs from the internet. Could an alleged cybersecurity test be a pretext for a crackdown? We'll discuss. This is Bloomberg. This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Emily Chang in San Francisco with Sherry On in New York and Heidi Stroud-Watts in Sydney. Let's get a look at the global tech stories of the day. Heidi, what do you got?
Emily, investment in Turkish startups fell 46% to $59 million in 2018. That's down from the country's record high of $111 million the year before. The news comes from monitoring group startups.watch.com that puts Turkey now in 21st place among European countries in attracting such investments last year. The UK holds the top spot with more than $8 billion of inflows. A key partner for Tencent is signaling more weakness in the Chinese video game market. Nexon is expecting its Chinese sales to drop by double digits. Last quarter, Nexon's revenue fell 22%. The Chinese gaming market is slowly recovering from last year's government ban on new titles. That game market in China is the world's largest, generating more than $30 billion in sales. And billionaire Alibaba co-founder Joe Tsai already owns a stake in the NBA's Brooklyn Nets, and now he's got his sights set on a new startup sports league. Tsai led a Series A funding round for the Premier Lacrosse League. Terms of the deal weren't disclosed. Tsai, who played lacrosse at Yale University, said he's encouraged by the sport's growing popularity. And those are the top global tech stories that we're watching. Sherry.
Heidi, thank you. Back in December, Google CEO Sundar Pichai spoke to members of Congress about reports that his company was planning a censored search engine in China.
Right now, we have no plans to launch in China. We don't have a search product there. Our core mission is to provide users access to information, and getting access to information is an important human right. So we are always compelled across the world to try hard to provide that information.
Well, that answer wasn't good enough for one shareholder. Azad Asset Management sent the company a letter saying, quote, in light of the Chinese government's repressive censorship and surveillance practice, we are concerned that a censored Google search product could further enable ongoing human rights violations. With that in mind, we're filing this shareholder resolution seeking a human rights impact assessment for a possible Google search product in China. To discuss, we've got Bloomberg Tech's Garrett Vink, who covers Alphabet here in New York. Garrett, so Project Dragonfly back on the table. What does this mean? Are we going to get a vote on this?
We'll probably see a vote, but to be honest, it's not going to go anywhere. I mean, this investment firm has a very small position in Google. More what this is about is them sort of, raising this issue again and again. And this is something that's not, going to go away for Google. The company has said, look, we're not doing it. As you saw that clip from the CEO there, their current line is that they have no current plans. Now, that's contradicted by some reporting that's out there that said the company was very far along, that they could have, almost launched this when it was found out and clearly put on hold.
So, Garrett, Sundar Pichai has said they have no plans to launch in China right now. I've talked to the CFO, Ruth Porat, who said they have no plans to launch in China right now. What exactly is Google doing with respect to China right now?
So Google obviously does employ quite a few people in China. The Android operating system is the most popular operating system for Chinese smartphone users. Chinese smartphone users use a ton of apps that are downloaded through the Android Play Store. So the company does have a stake in the country. What we're waiting for, though, is Google to say, okay, well, we're putting this thing, to bed, that Project Dragonfly, whatever you want to call it, is not going to go forward. And the company, although they say they have no plans right now, they've not come out and said what a lot of the internal activists want, a lot of what the external activists want, and that's to say, we're not going to do this. We're not going to build a search engine if it includes censorship.
How important would the China business be for Google?
I mean, China is, if not, the most important technology market of the future. It's definitely one of the most important markets, and there's definitely a sense that Google, missed out on a lot of the growth that's been happening there. If you look at Apple, a huge portion of their revenue and a huge portion of their growth comes from China, although that, sort of backfired in them when the Chinese economy contracted late last year. Google does have that presence when it comes to Android, but not when it comes to sort of their core search business, which is how they make most of their money.
Google co-founder Sergey Brin was one of the chief proponents of Google pulling out of China all those years ago. Do we know where Sergey Brin and Larry Page stand on China?
They've both been pretty careful to sort of, stay in the background on this. I mean, I've heard that they have sort of, answered questions at internal meetings at Google. They haven't come out strongly. I do think that there's a sense here that they want to let the current official leadership of Google, that Sundar Pichai, kind of take the lead on this one and sort of hold it. As you said, it's true. They were the ones that were concerned about, the company's presence, the influence that the Chinese government was trying to have on Google in China back when the company originally pulled out. At this point, though, they are not having, any strong opinions, and they still do have that controlling vote. So if they wanted this proposal by Azad Asset Management to pass, they could make it pass.
How does this play into Google's other controversies, such as the handling of sexual misconduct by executives? Would continued talk of this Project Dragonfly just continue to affect its image?
It definitely does. I mean, it stays out in the news, and more and more people sort of read about Google. And as the narrative is that this company is sort of beset by these problems, even though the underlying business seems to be going very well, firing on all cylinders, if this kind of stays out in the news and there's continued criticism, it might make it more difficult for Google to hire people. They might lose some of their top talent that has worked at Google for years, thinking it's a company that's different from other companies, that has values beyond just continuing to make money. Obviously, most Google employees are not necessarily out in the streets waving signs about this, but it is something that you can tell a lot of employees do think about and do care about.
Google employees were out in the streets waving signs around Google's handling of sexual misconduct, and there were some movements to agitate around this China issue. Are employees organizing about this?
They're still organizing, and to be clear, there was a huge turnout when it came to that specific walkout, which was in response to massive payouts to a specific executive, Andy Rubin, when there came accusations of sexual harassment while he was in a position of power at Google. When it comes to the China issue, there is a lot of people at Google that are concerned about this, but a lot of this sort of, engaging with the media, engaging with activist groups is coming from sort of this core group of people at Google that do care deeply about this, and they're reaching out to their fellow employees and trying to keep the fire going, trying to keep them organized. All
right, well, Garrett, thank you so much for your great reporting on this issue. Bloomberg Tech's Garrett DeVink for us there in New York. We have much more ahead. Stick with us. This is Bloomberg. Facebook is teaming up with third-party fact-checking organizations ahead of several African elections. The social network will work with local groups in South Africa, Nigeria, Kenya, Cameroon, and Senegal to determine if content is false. This also includes the company's WhatsApp messaging service. Facebook added they have also trained political parties, campaigns, and candidates on security practices. Meantime, Russia is planning to disconnect from the internet. Yes, that means the entire country, temporarily. Legislators are making moves to create a so-called sovereign internet, so traffic goes through mostly domestic portals. Moscow says this is an attempt to test the country's cyber defenses. How well equipped would it be if the country was entirely cut off? But critics have a different view, saying this risks handing the Kremlin extensive powers to censor the web. Joining me to discuss, Ryan Kalember, Senior Vice President for Cybersecurity Strategy at Proofpoint, a cybersecurity firm that services more than half of Fortune 500 companies. So what exactly does this mean?
Well, it means Russia is looking at extremely aggressive options to control pretty much every piece of communication that goes over the internet in their country.
So would this look like China's internet?
That seems to be the implication. They're looking to test their own version of the Great Firewall so that they could not only censor things that they've been censoring for many years now, but also have control over which communication channels were even viable, preventing people from using something like a WhatsApp, Telegram, Facebook, etc.
What kind of a firewall does Russia already have in place?
Well, for many, many years now, they've already had lots of different systems in the country's ISPs so that they had a reasonable amount of collection ability. They could see pretty much everything that was going on. They've also, in recent years, developed capabilities to actually block things. And through the legal system, they've also started to ban things like storing Russian people's data in other countries. So just last month, in fact, they reached out to Facebook and Twitter and said, you're not storing Russian citizens' data here in Russia, you're in violation of our laws. So they might use legal excuses to accomplish effectively the same thing.
What are the actual mechanics of this? Presumably, this can be done.
Oh, it absolutely can be done, and many countries do it. China is obviously the most obvious example, but in the Middle East, there are many different countries that, for whatever reason, they might be choosing to censor pornography or censor speech they might consider subversive, have set up ways to get the ISPs, which are effectively the only way out of that country from an internet perspective, to block what they choose to block.
Google and Facebook operate in Russia. They don't in China. What would this mean for them?
It would be a challenge. I actually think back to a couple years ago, actually maybe even a couple months ago, Telegram was blocked because it was using a domain, the messaging service, exactly, a domain fronting service hosted on Google to basically operate beyond these censorship restrictions. That was found out, and Google actually adapted to what the Russian government wanted in blocking this domain fronting activity so an unauthorized service couldn't be conducted in the country. I think actually this will have grave implications for any organization that does not want basically full Russian control of the data flowing across its services.
You raise an interesting point because we were just talking about Google's exploratory plans in China, and Sundar Pichai has made the point that they actually do have different rules in different countries that they abide by. China is just the one that we all know about. Does Google bend to government demands elsewhere in the same way that it might in China if it operated there?
Almost every company rather has to. I mean, we choose not to do business in Russia or China because as a cybersecurity company, it would be virtually impossible for us to conduct our mission of protecting our customers were we to comply with the laws in those countries. But this has a really long history. The fight that AT&T conducted against tapping phones decades and decades ago bears a lot of resemblance to a lot of these challenges that are going on now. And with governments that are a little bit more heavy-handed, those challenges look a lot different.
Would the Russians still potentially be able to meddle in other countries' elections if they were cut off in this way?
Well, any good cyber attack is not staged from your own servers and your own IP space or anything that can be traced back to you. It's staged from something compromised in some other location entirely. So this wouldn't really hamper their offensive capability.
So how does this fit into the bigger geopolitical issues at play right now?
Well, this is a fairly aggressive move. It's a very interesting thing for them to be able to test because it lets them know that one of the key tools that, say, NATO or the United States might choose to use against them can be blunted or at the very least sort of tolerated by the Russian infrastructure. That's a really interesting piece of knowledge that the West doesn't really have in this conflict.
What would this mean for users inside Russia? And what do we know about how they feel about things like this?
It's a really good question. The long history of sort of subversive speech in Russia being conducted across new apps that pop up, whether they're end-to-end encrypted like a WhatsApp or not, is fairly fascinating, but it's gradually being kind of forced down into things that the Russian state can control. So if Russia really cared about Facebook and Twitter, they wouldn't be pressuring them, and they wouldn't necessarily be shunting everybody to VKontakte, which is the Russian social network, which the Russian government would much prefer everyone use because they can surveil everything that's happening inside it.
So what are the biggest cyber threats you are looking at around the world right now?
Well, for most organizations, the biggest cyber threat will still be the theft of money. We sometimes forget this because this is such a massive geopolitical issue and things like misinformation and election interference dominate the headlines, but that still powers everything from a cybercrime perspective. And of course you have state actors like North Korea. The last time I was on here we were talking about this, pretty much acting like a cyber criminal enterprise. The big scary things though tend to be around either broad Internet of Things or critical infrastructure like power grids, which we do know are being explored in both an adversarial and defense sense by pretty much every government worth its salt with a proper cyber capability. And it's yet to be proven that the Ukraine example, which is probably the closest thing we've seen to a real nightmare from a cybersecurity perspective, is actually viable outside a very small country with one power grid.
All right. Fascinating. Lots to watch. Ryan Kalember of Proofpoint, thank you so much. Good to have you back here.
Great to be here.
All right, coming up, Amazon's Autoplay. The tech giant is in talks to buy an electric truck startup, partnering up with General Motors. We'll bring you the latest details next. Plus, Canada's answer to Tesla might not be what you'd expect. We'll take an all-electric three-wheeler for a ride on the streets of Vancouver. This is Bloomberg. Amazon and General Motors are in talks to invest in the electric pickup maker Rivian, not buy, invest in Rivian. This according to sources who say the deal is expected to value Rivian at between $1 and $2 billion. The investment would be a major boost for the company as it aims to be the first automaker with an electric pickup on the market. Joining us from Detroit to discuss, Bloomberg's David Welch. David, what?
Yeah, it's a big question here. You think about General Motors. Why would they do this? They already make pickup trucks. They're very good at it. They have an electric vehicle program. Why would they need a startup like Rivian? And what's Amazon doing here? So let's put it all together. General Motors is going to come out with 20 EVs by 2023. But the first few are not going to be pickup trucks, and most of those vehicles, from what I'm told, are going to be destined for the Chinese market. So there probably wasn't an electric pickup truck in the near future, maybe eventually. Rivian wants to have their truck ready, and they think they will have it ready by 2020. So for GM, this is a way to probably, in terms of GM's war chest, without spending too much money, get a pickup truck that they can get to market a lot faster, maybe get some engineering talent that they wouldn't otherwise have. Amazon, hey, this is a way to get cheap, clean electric delivery trucks to them pretty quickly, so they can use them to get packages all over the place.
Last week, we also covered Amazon's investment in Aurora, a self-driving tech startup that is building basically software and hardware for different automakers. That said, we had the CEO of Rivian on the show last year, and if I remember correctly, they wouldn't even show us a picture of the car. It was very secretive, still in development. How much has Rivian actually accomplished?
They have shown a truck. They've got a prototype now, and they've been talking about when they're actually going to have the thing ready, which is 2020. So, and they've raised quite a bit of money. It's a legitimate startup. They've got some real talent there. They're outside Detroit, so they're hiring people who know how to make actual vehicles as well. It's a pretty legitimate company. I sort of liken this as when General Motors bought Cruise Automation. GM already had a self-driving car initiative going on. They were already making vehicles that were trying to drive themselves. What they found, Cruise Automation in San Francisco was already strapping a system onto other companies' vehicles and driving, or rather, moving the vehicles without drivers. And so this is a case where I think they found somebody who's got some talent and got a program in the works, and they could maybe, by investing in it, accelerate their own development.
So clearly there are a lot of acquisitions or potential acquisitions, investment, competition happening in this space. What else are you watching?
You know, right now we're hearing just a lot of chatter about big car companies and big tech firms, but most of the big car companies are trying to buy self-driving car startups or invest in them, EV startups, battery startups. Tesla recently bought into a company that makes supercapacitors, which basically allow automotive batteries to be charged faster and go further on a charge. So even Tesla's buying into some technology companies. Some of it is just taking a flyer on small companies that might have some pretty good science. In other cases, it's a way to actually get somebody's hardware and accelerate your own development. It's a pretty good marriage, really. You think about it. You've got startups that are working solely on one project, and you have somebody with deep pockets who can come along, give them the cash they need to get to the next level. And in a case like GM and Rivian, you're going to get a company that's got a pickup truck sort of on the drawing board and a prototype. You not only get some money from GM and Amazon, you get maybe GM's manufacturing capability. And then once the truck is ready, you've got a ready-made customer who's invested in you, who wants to use the trucks to deliver. So you've got already some maybe pre-booked sales. So you can kind of see it working out that way.
And a new electrification empire. All right. Bloomberg's David Welch in Detroit, thanks so much for giving us some context there. Meantime, you have probably never seen a vehicle like the one we are going to show you next. But if a publicly traded Canadian company has its way, it won't be long before you see a lot of them. Bloomberg's Ed Ludlow reports from Vancouver.
All electric like a Tesla, priced like a Ford Fiesta, and one of the weirdest looking vehicles you've ever seen. Introducing the Solo.
A clean energy electric vehicle for one person was an opportunity that was too great not to seize.
The three-wheel EV costs $15,500 and is being hand-built in Vancouver by Electromechanica. The company has 23,000 Solo pre-orders. To meet demand, it's going to mass-produce an updated model in China.
The vehicle concept was always to have a vehicle that could be assembled quickly, efficiently, and with high quality in under 3 hours, and that it can.
The Solo has 100 miles of range and charges in 3 hours. It's designed with a specific group in mind. The company says 83% of North American commuters drive to work alone each day. But the question is whether those commuters would be prepared to drive to work in something like this that you can just fit in. The company's optimism isn't backed up by the numbers.
7 out of 10 of what the consumer is buying is a truck at this point. So the idea of a single-seater, I think, limits you to a very specific user.
But there are areas Bloomberg Intelligence sees as more promising. Electromechanica is looking at car sharing, and 7-Eleven and DHL are already testing for deliveries.
You don't need to have 2 seats in a delivery vehicle. You've got 1 employee. Why is the second seat there?
Investors still need convincing. Shares have fallen since the company IPO'd on the Nasdaq last August. But CEO Kroll says the Solo will be profitable.
25% gross profit is built into the design of the car, and that's absolutely fine.
The company hopes to deliver 5,000 China-produced Solos in 2019, then a further 20,000 in 2020. Longer term, production could be brought back home. General Motors announced in October it was closing its Oshawa site after more than 100 years of manufacturing in Canada. CEO Kroll says the company is interested in the site. They're also eyeing more passengers with a sporty 2-seater all-electric Roadster. But can it handle the challenge of meeting billions of dollars worth of pre-orders? Ed Ludlow, Bloomberg News, Vancouver.
Our very own Ed Ludlow there from Vancouver. And that does it for this edition of Bloomberg Technology. We are live streaming on Twitter. Check us out at Technology and follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg.